This is the BioCentury Show. Brought to you by the 24th BioEquity Europe, scheduled for May 2024 in San Sebastian, Spain. Join BioCentury EBD Group and Regional Host Committee Chair Isios Capital for Biotech's premier CEO and investor conference in one of the culinary capitals of the world.
Hello and welcome to the BioCentury Show. I am Simone Fishburn, Editor-in-Chief at BioCentury, and I am so happy to be joined today by Bruce Booth, partner at Atlas Venture. Bruce, we met early on after I joined BioCentury, believe it or not, now 11 years ago. How time flies. And I feel like it's a different world in biotech, but at the same time, a lot of things haven't changed. So that was before the biggest bull run biotech had ever seen, but also then we were coming out of still the depths of the 2008 crisis. You might take it back to crises before that even. Yeah. Technologies like gene editing were making a splash. I think 2013, 2012, 13 were, the first papers. Others like gene therapy really seemed to be stuck in neutral at that time. You have been both a participant, a driver, and an observer, and sometimes commentator on our industry. And I know that people eagerly, while they're still fueling on BioCentury's content, they eagerly anticipate your year-end review. And I think I want to get into some of the findings of your latest one and some of your thoughts more broadly. So I think there's no escaping the first question, which has to be about the capital markets and the financing landscape. I'm sure people are agog out there about what you're going to say. It has been very rough. So let's start with the other side and tell us what are the sources for optimism right now.
Sure. First, thanks, Simone, for having me. Fun to be here with BioCentury. So capital markets. So look, things have gotten a lot better since the end of October, right? We were down around 60. I think it's up something like 55%, the XBI since then. So the public markets appear to be thawing a bit. We topped out over 100 and trickled back down a little bit here. But I think February was actually the largest single month for follow-on activity ever, including pipes and all other versions of follow-on transactions. So money is starting to flow. I think a big part of that has been M&A recycling, a theme that you've written about and others about the billions of capital that's been returned to specialist investors and now is recycling back into the ecosystem. And so I think all of those things create a favorable backdrop for companies trying to advance their programs. I think everybody did belt tightening the last few years. And so you're actually coming from a good base in terms of, overall burn rates in companies and such, I think are now in a reasonable place to be financed by the next wave of investors. Where there are some constraints, I'd say, is in the late stage private world. Companies on the very front end, there's lots of us in the venture creation ecosystem still backing lots of companies. That number is down a bit, but they're still getting financed. I think the ones that are facing more challenges in that gap of the old crossover market, where the public investors that had been doing that have still not come back in full force. There's enough things to pick on in the public markets and value to find there that has kept a lot of them busy, focused on that part of the ecosystem. So I didn't mean to shift from optimism to some of the more challenges, but that's definitely one of the areas that I think, I'm looking forward to some more resilience in.
Well, one of the things that I want to talk about in terms of before and after, and it sort of comes out of some of your data, which also centered on this, is that we're seeing fewer huge rounds now. Let's call it 100 million plus supersized A rounds even, right? Which is something that we've been tracked. Now, that's dropped off, which is no surprise in this market. But my question really is, are we going to return to those? And specifically, do you think that the new technologies that are emerging intrinsically require deeper pockets to start with? Or was that a feature of just the free money era when, they're passing around free appetizers? Eat. That was the sort of mantra, right?
Yeah, I'd say two things. One, the big mega rounds, bigger than 100, have come down. But in some ways, I'm surprised they haven't gone lower. When the bull market started in 2013, you might see one of those types of rounds a quarter, maybe 4 or 5 a year throughout most of the last decade until 2018 and 19. It started to tick up, but I think in the end of last year, in the fourth quarter, we saw roughly 15 or 20 just in the fourth quarter. And so there still is this pace, remarkably in some ways, of large capital coming into companies, much reduced from where we were at the peak of the pandemic. But there's still probably more capital going into companies on average than because of these mega rounds than we saw, say, before 2018, for instance, which doesn't feel like, for those of us that have been doing this for a few decades, that doesn't feel like that long ago from an overall capital market.
Is that because, first of all, VCs, there's still a lot of money in the VC funds, and secondly, is this a haves and have-nots? So if you're good, you're worth funding deeply. Have we sort of rebased expectations in terms of the realm of things that constitute early?
Yeah, I mean, you look at a lot of those companies that are raising the big rounds, and those are, significant new platform companies or new companies formed around later stage assets that require just really large phase 2 and 3 programs. And so a lot of them, are just very different than the, let's dabble with some new science and try to figure it out, which was super common a dozen years ago or so. You asked about whether the technologies themselves require more cash. I'd say there's certainly some of that. Costs have gone up across the ecosystem in general. But it's hard for me to put my finger on, yes, you need much deeper pockets to make drugs today than, say, 5 to 8 years ago when those rounds were still not that common. Certainly, over 15 years, yes, you'd have to say that. But in that kind of 2017, 18, 19 period of time, we didn't see nearly as many large rounds. And I would argue the science and the technology platforms that were being built then were, very much like the ones being done today.
So one thing I want to make sure that we address quite early, especially, is, there's a lot of companies out there, sort of emerging companies, that would like to get on your radar, the radar of other investors. It's really hard to rise above the noise right now. There's a lot of other companies. There's still a sort of fervent pace of biology. Maybe you can walk our audience through some do's and don'ts in terms of how to catch that big whale.
Yeah, I would say for most venture firms, a cold email doesn't work. So just trying to reach out and say, hey, I'm an entrepreneur and I have a plan, or I'm a scientist and I have an idea, that generally doesn't work because our inboxes get flooded with those. It's just, it's too much to filter through that. And so finding a referral into a venture firm, if you look at their portfolio and you find an executive that they've worked with, reach out to that executive and get the introduction into a venture capital firm. The sort of warm, qualified referral is what opens up lots more doors here. And certainly, that can come through entrepreneurs, it can come through co-investors, it can come through even scientists. Well-known scientists are commonly referring, hey, my colleague is in, the biochemistry department and has this observation. Will you mind chatting with them? Those kinds of connections happen all the time. And so I'd say find a warm entry, be entrepreneurial about how you find access and recommendations to get into firms.
So later on,
probably no different than many things in life.
Right. No, that's fair. And I think people need to hear it. I think later on, I want to get into some of the things that you think aren't, let's say, maybe aren't value drivers, but, this touches on one of them. And in your very nice analysis, you use the phrase that industry, the biopharma industry, wastes tons chasing, quote unquote, hot, unvalidated targets. And I think that the story of the last few years mapped onto the story of incredible innovation is also the story of flocking after the same targets and opportunities. And I think that's a pain point for many people. So I want to ask you a couple of things about that. What kind of evidence would you consider validation as you think about hot and validated targets? What do you look for in terms of risk in that sense? And I suppose an add-on question, I'm making this a little bit large, but is, what do you think could change that dynamic?
Yeah. I'd say on validation, it can come from many, obviously many perspectives. But following nature's experiments is probably the best one. So some version of genetic validation, either a particular patient likely to respond, or in this extreme phenotype, we see this, those kinds of signals in human genetics change the curve of attrition. And this has been published on repeatedly around these subjects. And so it's why human genetics is such a powerful driver for lots of programs in our portfolio and across the industry. In the case of that particular analysis, what's striking is just the number of programs when someone declares a target to be so-called validated or sees an early clinical signal, how many others crash into it. I mean, the CD19, HER2 stories, how many of those are actually in development today? There's a score of HER2 ADCs that are now in development. I mean, it's really remarkable how the industry sort of attacks these known targets with just massive resources.
So in that case, in your earlier scenario, you talked about validation as something that you would consider from an investment perspective. But when you're talking about companies flocking after it, you're saying there's been some signal in, let's say, a clinical trial, I assume you mean?
Yeah, I mean, I think there's two, that analysis had sort of two pieces. One was for the known targets that now have clinical signal, and you see them just get overwhelming amounts of activity against them. In the example of, I believe it was IGF-1R, there was tons of preclinical data that suggested this should be interesting, animal models, xenografts, all of this stuff, but yet they could never convert into clinical signal, at least in cancer. Obviously, IGF-1R works in other settings, but in the cancer space, that was one of the more egregious examples of, I forget what the number was, 17 different programs entering the clinic and 10,000 patients dosed or something. You'd think as an industry, after the first few thousand were dosed and we didn't see a signal, that perhaps we would have gotten the message. But,
well, how do you reconcile that with something like, we talked the other day about GLP, the GLP-1s, which have taken 20 years. And at the end of the day, there were actually only two companies that stuck with it and went there. So how do you look at that space?
Yeah, I mean, look, the obesity space, what a fantastic overnight success here with the
20-year overnight success, right? Yeah,
exactly. I mean, those two companies just deserve a ton of credit. We were chatting about this. They deserve sort of the kudos for being the first movers in that space, for not only committing and persisting in GLP for diabetes, but then moving it into obesity and other areas. And now what looks like probably the biggest paradigm shift here in the next decade will be the use of these in such an important, morbidity and mortality in society. So really, Lilly and Novo deserve a ton of credit. Venture in some ways was caught flat-footed. I don't think 6-7 years ago there was a venture company making for instance, an oral GLP-1. That all came after we saw this giant wave, and there have been a lot of great venture successes in that space, but I'd say they were mostly pivots rather than ones where that was the on paper thesis at the time.
So we'll take a break in a minute, but I want to close the loop on this and now go back and say, we're going to see flocking, right? We're going to see a lot of companies now going after new opportunities in that space. And so to what degree does that really follow this line of everybody going after something that is already taken, or is there actually opportunity for?
I think within metabolic disease, there's a lot of opportunities. The GLP-1s have blazed a great trail. They've shown that weight loss leads to all of these other health benefits. Pharmacologic weight loss leading to these health benefits, I can say, and created a regulatory path for it. When we were in the obesity space, almost 20 years ago, we started a company called Zafgen, which met a sad end. But at the time, everybody kept telling us you can't make drugs for obesity. The FDA will never approve anything for obesity. You have to go after these very narrow populations of Prader-Willi genetic obesity and hyperphagia, or these other settings. And it was climbing a wall the whole time. Whereas now I think those pathways have opened up. And so you're going to see companies saying, hey, we can go after some of these interesting genetic targets in obesity. There's a whole host of them there that could either be complementary to the GLP-1s or perhaps offer alternatives that might be oral, that might not have some of the side effect profiles, or might have lasting weight loss rather than it looks like the GLP-1s will need to be taken permanently to maintain weight loss. So a drug that reestablishes a set point, for instance, around weight in a different way could be interesting. So I think there's lots of room to innovate right now in the area of metabolic biology.
We're going to take a short break, and when we come back, we'll talk more about the drivers of biotech's future.
For more than 20 years, BioEquity Europe has been where CEOs and investors gather to network, partner, and debate critical issues facing the biotech industry. In 2024, BioEquity heads to San Sebastian, Spain, in Basque Country, May 12th to 14th. Join BioCentury, EBD Group, and Regional Host Committee Chair Iseos Capital in one of the world's culinary capitals for a destination event designed for CEOs, investors, and decision-makers across the global biopharma ecosystem. In 2023, 300 VCs and 330 biotech CEOs joined BioEquity in Dublin, Ireland. In San Sebastian, the program will feature more than 100 emerging biotechs that will present their story to investors and potential partners. Don't wait, last year's BioEquity conference sold out. Visit bioequityeurope.com for more information.
We are back at the BioCentury Show with Bruce Booth. Bruce, I want to talk a little bit about next generation modalities. These are starting to, in your words, move the needle on commercial value. ADCs, I think we don't even need to worry, but talk about that or dispute that. mRNA, at least in the context of vaccines, has proved itself. Bispecifics, RNAi, I would argue. Are there others? Are those the ones, or are you optimistic sort of from a commercial perspective of any other kind of emerging modalities?
Yeah. So look, those are the four that have now established themselves commercially. Again, thinking of those 20-year overnight successes, all of those came from, multi-decade periods of work, not only in research and then development and now identifying commercial opportunities. And each have, call it, 6 to 12 approved therapies around those. Maybe not in the vaccine space yet, but I'm sure it'll get there. mRNA will get there. Lots of the newer wave of these, I'd say, have enormous potential, but I am sure they will go through their ups and downs. I mean, the field of protein degradation is one where there's lots of new modalities, whether it's PROTACs or glues. Other induced proximity approaches there, I think, are particularly intriguing. I do think in the cell and gene therapy space, we're in such early innings of those as novel modalities. I think in 10 or 15 years, we will look back and say, wait, you used an actual virus to deliver stuff? Like, that's probably not going to be the way these therapies go over the next multiple decades, right? It's super clunky and cumbersome, and you're inducing an immune response every time. Non-viral mechanisms to get those in are the future. And the question is, where does the transition occur? In the near term, the only real product opportunities are AAV, or lentivirus opportunities. A few early approvals in each of those, but early innings, I would say.
Well, okay, so I was going to go in a different direction and come to that, but now I'm going to carry on that because that's actually a particular hot topic for me, which is delivery technologies. In my mind, this is a very long-standing problem. I think it actually is emerging as a bottleneck to unlocking the real potential of many of the existing modalities, RNAis, gene therapies. I mean, the target space you'd open if you could actually deliver to any cell, Yeah. So, first of all, are you investing in such companies? But how do you think this plays out? I think, I spoke with one commentator who's like, we used to think about a solution. There's no longer one solution. It's sort of more like a toolbox. How are you thinking about this sort of problem in terms of finding solutions for it?
Yeah, no, I totally agree with that. There won't be, one ring to rule them all here in terms of delivery. I think you're going to have lots of specific solutions for specific tissues. And we are investing in this space, whether it be, non-viral sort of liposome-based delivery, immune silent delivery, getting away from the liver, extrahepatic delivery to other tissues, GenBio, Envelop, other companies are in that space, or using antibodies to deliver payloads just to particular cells, even beyond the cancer applications where ADCs are. So whether this is Dyne delivering oligos to muscle for various, muscle disorders, Or even in immunology, can you deliver payloads directly to certain immune cell compartments? And so I think we're going to continue to see a proliferation of tools, of which many of them will only be solutions to one or two problems each, but there's dozens and dozens, if not hundreds, of problems to solve. So I do think there's lots of room to explore there.
So staying with this idea of proliferation, there's actually what I would call a proliferation of new molecular species, right? Circular RNA, long non-coding RNA, whichever. There's other modalities that have been around a very long time, but not yet made it to validation. The microbiome has sort of entered a don't say microbiome era almost. Stem cells, still plugging along. How are you thinking about this? Is there room for an endless list of new molecule types? Can the ecosystem and biology only sort of at the end of the day reduce to a few, and then we use our modular toolbox to get it wherever we want?
Yeah, I do think, it's like the Cambrian explosion, right? You have the Cambrian explosion of lots of different things when a new breakthrough comes out, and you have lots of different potential modalities. Only a handful of these modalities at the end of the day are going to move the needle enough for patients where they turn into entire classes of new drugs. RNAi is an interesting example there. Came out of the wave of starting to understand how small RNAs are being processed inside of cells and how controlling translation and such. And we now have, 5 or 6 approved RNAi drugs, but that explosion, if you think about all the other types of oligotherapies that came along around that time, aptamers being one, right. They really haven't been able to deliver the kind of patient impact. You mentioned other RNA forms. One of my first big challenges as an investor was co-founding Miragen in the microRNA space. You may remember Miragen. We were trying to make either mirror mimetics or anti-mirrors, and suffice to say, the company doesn't exist anymore. And you learn a lot from that process of how challenging it is to make a new modality against, what might be slightly ambiguous biology.
So one of the things here that concerns me is in your data and generally, in fact, is that your analysis shows a decrease in what you call composite success rates, which I'm going to use your words, the 10-year trend. This is like in the numbers of drugs that seem to make it through different phases of development. And, essentially, it seems to show that from 2017 to 2013, industry got less efficient at taking drugs from one phase to the next. First of all, you put that down to 3 parameters: novel modalities, regulatory endpoints, and late-stage blow-ups. First of all, can I just ask you to walk us through those? Because some of those seem like novel modalities that might iron out over time. Late-stage blow-ups, maybe that's always part of the system, right? Yeah. Although I could argue it shouldn't be. But walk us through how important you think each of those are and what's here to stay. Because the idea of us getting less efficient is not a good one.
Yeah. No, I was surprised by the stats, to be honest. I assumed that at worst case, we would be, status quo, but they did seem to trend down in those data. I think IQVIA's most recent report, which came out a couple of weeks ago, shows that ticking back up. So maybe there is some optimism around that. I do think the novel modalities and the increased risk we take with the substrate of our drugs themselves bear out in the risk profile in phase 1 and phase 2. So you're learning new things. So I think the increase in risk there, in particular in phase 1, is when you find out that you can't get the drug where you want it to go, or there's immunogenicity, or there are other challenges when you first take a new modality into patients. And so I think that's being what's driving some of that early enhanced attrition that we've seen in the data sets over the last handful of years. The regulatory goalposts, look, the regulators around the world go through cycles of when they're more accommodating and when they're less accommodating, depending on who's in charge, how it's, whether they just had a scandal or not. And so I think that will continue.
Shocked to hear that these things make a difference, right?
Yes, exactly. Yeah. I think we'll continue to see that ebb and flow. And, I think we should just assume that's part of the business at the end of the day. the one thing on the numbers that I find intriguing, and I will venture to guess that the numbers will get worse over the next couple of years. And the reason why is because everybody belt tightened since that data. So that data looks at sort of through, I think it was 22, it was a 23 report that came out. And so if you think about the amount of capital into the ecosystem on the constrained side from 2021 until 2024 or so, capital's off probably 50+% in terms of burn inside of biotech companies, which means there will be a lot of programs that essentially come up as terminated in these databases. So for the lack of funds, you're going to see terminations. Those terminations will show up, at least in my understanding of how they get the aggregate data, they'll show up as failures. Failures because failure to fund, failure to be above the bar for funding counts as a reason for failure. And so that'll be interesting. Maybe the data providers like IQVIA will be able to discern which is which, but I think there could be a financially driven blip in the data sets that we should be mindful of not over-interpreting.
Yeah, and let's acknowledge that a couple of the years in that time frame were pandemic years, which is a bit of a, there's a lot of money, but that doesn't mean that the programs move forward. So everybody stopped to do something else. But I want to map that back onto, this new, the cutting edge, new modalities. And, what's, I guess, I don't know if I would say concerning or surprising to me is that it still seems to, it took 20 years or forever, whichever way you look at it, to get monoclonal antibodies to work. It took 20 years for gene therapies. It doesn't seem to be that we're getting any faster. And I think I would have expected some kind of orthogonal learnings that as you bring one forward, you've talked about regulatory blowups, but as you bring something forward, you're looking at it and you go, oh, look, gene therapy faced that deal. Hey, bispecific friends, we should think about that, or whatever it is. Are we learning? Does it have to take 20 years?
Yeah, look, I definitely think we're learning a lot around, how the body engages with these new drug modalities. I think the challenge is for everything we learn, there's still so much more to learn. It's the old, as we know more, we know less type of point around, the complexity of the human body and how we respond to these things. You mentioned, bispecifics. Think about bispecifics in cell therapy to things like CD19. We've spent the last 10 years learning about this. And now all of a sudden, hey, we might be able to apply all of those learnings from oncology. We can take the cleanest, best, safest one of those and apply it to, lupus and other autoimmune diseases. So I'd say that's a great example of sort of on the back of learning in oncology and how to turn, cell therapy against CD19, how to apply that now to a new space. And so I'd love to see more of that happen over time. And certainly I think there's some great opportunities for doing that. And the focus has been on cancer for roughly 45% of the industry's pipeline for a while. There's a lot of learnings we take from that core work that we've done for 20 years to other settings, cell therapies being one, but even the precision oncology area, if you then turn that to precision neuroscience and think, hey, GBA Parkinson's is a disease in and of itself, not just a type of Parkinson's. Let's go after that with particular therapies. And there's countless other precision neuroscience applications. And so I do think as a sector, we are applying these learnings of how we think about reaching patients and delivering medicine. So that was my note of optimism.
Well, now you've brought me to the subject that every single conversation must include, which is AI. And you've brought me there because you've talked about things like precision neuroscience. We've talked about sort of cycle times, if not costs. And obviously AI has the potential to interrogate machine learning, interrogate very large data sets, maybe make us more efficient at coming to some conclusions. What is your level of optimism? What are your thoughts about the impact of AI on how we do on how this business runs itself?
Yeah. Look, I think anyone today has to acknowledge, the power of AI and machine learning to solve, specific problems here. The bigger problems, I do worry how far hype has gone beyond reality. there are clearly great opportunities to take large data sets, whether it's patient data sets, clinical data sets, and the like, and apply AI and machine learning to them to identify patterns in there that might pick targets. It might help you identify which patients are likely to respond. I think true generative AI coming up with brand new molecules never before seen by man. I think that's remains elusive. A lot of the discovery-focused AI shops are, mining patent literature and adding methyl groups here and there to existing things. And that has value, and that has some value, but separating that from the sort of hype of, hey, we're going to turn a 4-year discovery process into 4 days in a computer, and it's going to be great, and we're going to, be cranking out tons of drugs. I think that's just not borne out by history, right? The first, the cover of Fortune magazine in 1981 was Merck's new computer that was going to design drugs. And, here we are, 4 decades later, and, we're still learning how to apply all this powerful computation to making new medicines. And I'm a big fan of it. We put money where our mouth is on that, starting into this back in 2009 as a computer-focused drug company. And every one of our companies has some version of that in its wheelhouse around AI, machine learning, big compute, big data, computer processing. So I'm enthusiastic about it. You can't dismiss it, but I think a level of cautious optimism is required.
Well, that's a great place to end this. Maybe we're waiting on another 40-year overnight success story with that,
Exactly.
But Bruce, thank you very much for joining. We look forward to doing this again sometime, and it's been a great conversation. Thanks.
Thanks for having me. Take care. Bye-bye.
Brought to you by the 24th BioEquity Europe, scheduled for May 2024 in San Sebastian, Spain. Join BioCentury EBD Group and Regional Host Committee Chair Isios Capital for Biotech's premier CEO and investor conference in one of the culinary capitals of the world.